वक्रतुंड महाकाय सूर्यकोटि समप्रभ निर्विघ्नं कुरु मे देव सर्वकार्येषु सर्वदा।
Nagawekar sir, the floor is yours. Unmute yourself, sir.
Yes. Am I audible now?
Yeah.
Friends, good evening. Today is our national webinar on Union Budget 2022, mainly related with construction industry. Friends, you know, BI has always been stressing that around 16% of the nation's working population depends on construction for its livelihood, and that the Indian construction industry employs over 30 million people and creates assets worth over 200 billion. It contributes more than 5% to the nation's GDP and 78% to the gross capital information. And hence, BI has always been requesting the government of India to not only spend more on infrastructure construction and housing development, but has also been requesting for giving the Indian construction industry its due as regards proper recognition and ironing out of some contentious issues. Union Budget 22-23 has now taken a step in the right direction. The 7 engines that drive PM Gati Shakti are roads, railways, airports, ports, mass transport, waterways, and logistic infrastructure. PM Gati Shakti National Master Plan will encompass the 7 engines for economic transformation, seamless multimodal connectivity, and logistic efficiency. The projects pertaining to these 7 engines in the national infrastructure pipeline will be aligned with PM Gati Shakti framework. This is a big boost to the construction industry. The location to the affordable housing, MSME, etc. will also boost the construction industry. I will not dwell into more details and leave it to the learned speakers to highlight them. But on the other, the budget could have taken some more steps, which BI had highlighted in its memorandum to the Union Finance Ministry, like inclusion of petrol, diesel, and other petroleum products under GST regime, which would have been an additional incentive to the construction industry to sustain the impact of COVID-19 pandemic. Friends, BI had also requested for reduction in GST rate from 18% to 12%, as the majority of the civil construction contract are works undertaken to private sector. BI had also made many other suggestions with regards to indirect and direct taxes. The memorandums have been hosted on official website of BI, www.bionline.in. I welcome here today's speaker, Chartered Accountant Tarun Ghia ji and Chartered Accountant M. Raveendaran, and thank them for acceding to our request to address our members today. I also welcome all senior functionaries of BI from across India who have joined us today. Participants who have registered and joined us are also welcome. I wish you all a very informative evening. Friends, with this, I now request our beloved President to offer his introductory welcome remarks on today's webinar. President, sir, please unmute yourself, sir.
Are you hearing me?
Yeah.
Namaskar to all. I welcome to Shri Tarun Ghia, CA, Chairman, BI Taxation Committee, and Shri Raveendaran, CA, Chairman, BI Taxation-Indirect Taxes Committee, Shri S.D. Kanan, Co-Chairman, Direct Taxation Committee, Co-Chairman, Shri Naresh Grover, Co-Chairman, Direct Taxes, Shri Naresh Gaurav Goyalji, CA, Co-Chairman, BI Taxation Indirect, Shri Srinivas Murthy, Co-Chairman, Indirect Taxes, and our BI office team, Shri Pradeep Nagawekar, Honorable General Secretary, BI, Shri Raju Jonji, Executive Secretary, and all members of BI family who are participating in the meeting. Friends, I have great pleasure to welcome you all the national webinar on Union Budget 2022 on the construction industry. Union Budget 2022 was presented on Tuesday, 1 February 2022, and BI turned to none other than the BI long-standing friend and guide, Shri CA Tarun Ghia, Chairman, BI Taxation-Direct Taxes Committee, and CA M Raveendaran, Chairman, BI Taxation-Indirect Taxes Committee, for benefiting us all the Union Budget 2022. Tarun Ghia ji and Shri M Raveendaran ji, I welcome you and thank you for accepting our request. As usual, Government of India had requested BI for sending its suggestion for consideration or incorporation in Union Budget 2022, and which BI headquarters had done, and you can all access it on BI website www.bionline.in. But I told that this year some of the BI suggestions have been considered in the Union Budget 2022. I am also very happy to inform that our Tarun Ghia ji, Chairman, BI Taxation-Direct Taxation Committee, and Shri Raveendaran ji have presented a pre-budget memorandum to the Finance Secretary on 30 December 2021 and appreciated by other associations too. I express my sincere thanks to them. Friends, BI is also consulting experts to submit a post-budget memorandum to the Union Finance Minister, Srimati Nirmala Sitharaman ji, explaining about the impact of budget in our industry. I request you all to send our comments and suggestions for the inclusion in the memorandum on the tax proposal to enable us finalizing the memorandum to be submitted to the government. The Honorable Finance Minister, Sitharaman ji, stated that the country is expected to be grow at 9.27% in the coming year, with the focus on 4 pillars of development: inclusive development, productivity enhancement, energy transition, and climate action. The budget gives a blueprint on the economy from India at 75 to India at 100. The budget was populist budget. It was more emphasis on the infrastructure sector and real estate sector. That is highway expansion by 25,000 kilometers to 60,000 crores on the Nal Se Jal scheme. 5 river link projects across various states. Rupees 48,000 crore on PM housing scheme. North infrastructure development 48,000 crore rupees allocated to the housing project under PM housing scheme for year 23. The government could have given a further boost on the real estate sector. There have been many passing concerns in the real sector and have not to be addressed, such as easing equity, reduction in levy taxes, tax deductions on home loans to give inputs to buyer sentiment, granting of industry status to overall real estate sector, and implementation to single window clearance amongst others. The infrastructure sector and MSME sector has received a lot of funds, and this is a good news for our contractor members. I will go into the detail and leave it to the CA, Shri Tarun Ghia ji and Shri Raveendaran ji for briefing you all. I once again welcome you all and wish you all very informative evening. Jai Hind.
Thank you, President Sir. Friends, I now introduce today's speaker, Mr. Tarun Ghia ji, and second, Mr. M. Raveendaran ji. Friends, Shri Tarun Ghia ji is a practicing chartered accountant since 1984. He is also project management consultant to various redevelopment projects as well as self-redevelopment projects. He is elected Central Council member of the Institute of Chartered Accountants of India. He represents as a chairman many organizations such as Economic and Commercial Laws and WTO. He is also chairman on the Committee for Development of International Trade Services and WTO. He is representing profession at national and international levels. He is the immediate past chairman, Direct Taxes Committee. He is also a director, Accounting Research Foundation. He has represented ICAI abroad and addressed meetings at various world forums. He has represented ICAI on the Central Board of Taxes group on changes in minimum alternative taxation provisions under Section 115 JB of the Income Tax Act 1961. He has also represented on various other similar government committees of Government of India. He is also advisor to Builders Association of India on direct tax matters and for their representation to the government and other concerned authorities on direct taxes and other revenue laws and other issues. Chairman, Direct Taxes Committee, Builders Association of India. And our second speaker, Shri M. Raveendaran, he is also a practicing chartered accountant. He is a fellow member of the Institute of Chartered Accountants of India. He is also associated with BI since 1995-96 from Erode Center as a patron member of BI. He is at present General Council member of the BI and chairman of Builders Association of India's Direct Taxation Committee. He specializes in direct and indirect taxes and preparation of representation of working contractors. Friends, as you all know, this 360-degree bird-eye visionary budget has given a good boost to our infrastructure and as well as construction industry. I will request both the speakers to throw the light on the positive and negative aspects of this budget in connection with our construction industry. Now I request as today's guest speaker, Mr. Tarun Ghia ji. Sir, Tarun ji, Floor is now
Secretary
yours.
sir, what
Please.
time he has come? Ghia sir?
Yes, he is there.
Tarun ji, कौन से नाम से आए?
No, iPad है sir. No, there is no name, I think.
iPad.
Tarun ji are there?
Tarun Ghia sir. Hello.
I think
Can you show your hand? Can you use the app?
But acha, he might be muted. He is there. Sir, please unmute.
नहीं उनको मेरे को करना. What is
He
not
is
the
asking
name
you
क्या?
to unmute.
Name क्या है?
He is the third row of screen view.
Now tell me the name.
Madhu ji.
हाँ name बोलो ना.
iPad.
अच्छा.
Arrow is there. He can
हाँ. So unmute yourself.
Yes, sir.
Thank you.
Yes.
iPad लिखा है ना.
Good evening, esteemed participants. Honorary President of the Builders Association of India, Shri Ram Gupta ji. Honorary Vice President, Shri Neerav Parmar ji. Honorary General Secretary, Shri Pradeep Nagawekar ji. Honorary General Treasurer, Shri Ghia ji. Executive Secretary, Mr. Raju Jones ji. Head Communications, S. Madhusudan ji. I had a good company at the desire of President. I had represented at the Finance Ministry in the company of Indirect Taxation Chairman Raveendaran ji. He is the co-speaker today. Other co-chairmen and esteemed participants, the members of the BAI. Let me at the outset inform you friends that morning when I came here, the lights were there, but now in half of the Santa Cruz East area, the lights are not there. So I am without AC and without lights and only in the sunlight to the extent I am visible. Please pardon me for that. Honorary President and Rihwani ji has substantially given the background of the budget presentation and some of the pluses and expectations which could not be fulfilled by the budget. I have attended some meetings of the BAI so far. I found that the builders, developers, contractors at the BAI are very, very amicable and I enjoyed their company. Let me at the outset also mention some of the broad views which can be considered as relevant to the budget and relevant to the broader part of the economy before I go to the core taxation aspects. Friends, you will appreciate that the state of the economy before Corona took place around March 2020 was not so really good. I had the opportunity of various presentations in the context of various budgets, including February 2020, and the economy on this slowdown path. After the Corona, at the Institute, I was appointed as chairman of the India Economy Group for revival of the Indian economy and for representation to the government of India. And I had also the opportunity of co-opting various IRS and IAS members in my group. And when we studied the Indian economy from revival point of view, we could see that there was one can say, blessing in disguise or a turnaround change in the economy of India, largely due to the change equations because of the specifics attributable to China and its role. And more importantly, the policy of the China in the context of metal production and metal use. And more importantly, the reliance, or rather distrust of the advanced and emerging economies on supply chains so much dominated by the China. And we had come out with the report that India can certainly take advantage of the same. Indian economy was already on the growth path before the Union Budget 2022-23 was presented. The economy was, one can say, growing at a very fast pace till the oil issue started. If my social media posts are read, before the Union Budget, I think all of us were aware that the budget is intended to likely to be growth oriented. But how the government would deal with the growth, how the government would deal with the emerging and enlarging issue of the inflation, which is quite due to the growth of the economy, but more hugely, which is due to the oil price rising across the globe. And that is where the limitations arise. Limitations also were there with respect to government having already spent substantial amount in the context of healthcare, in the context of various healths supported by the government in the context of Corona. So government spending ability was certainly questionable. And it was an open secret that if the government spends more, it will lead to more fiscal deficit and is likely to take us to more inflation. So it is in this background that we all were awaiting how the government actually unveils its roadmap to revival of the economy and deal with the enlarging issue of the unemployment. So friends, most of us also know that traditionally we had the understanding that spending is a vice and saving is a virtue. It was Keynes, the modern economist, who propagated the theory and largely accepted today by the globe that spending is a virtue and saving is a vice. Not for the individuals, but for the government. He canvassed the theory that in the economy, which is quite in depression and which needs to be revived, if government spends, and more particularly towards building capital assets in the context of infrastructure and other capital assets like real estate, then it will have a larger multiplier effect. And all the bottlenecks, whether the intended benefit reaches to the poorest of the poor or not, will all be solved, because at the grassroots level, the workers, the semi-skilled labor get a lot of work, they get the income, that boosts the consumption also, and that starts reviving the economy from the grassroots level. And therefore, it appears very loudly that Madam Nirmala Shantharamanji has chosen that path, which was shown by the Keynes, as mentioned by the President Gupta Sahab and Rihwani ji, that a large amount has been planned to be spent for the capital expenditure. And it is likely to boost the growth on capital account and ultimately will lead to the growth on revenue account. Now, coming to the real estate industry, which comprises builders, developers, which are more or less synonym, and contractors. Contractors in the context of infrastructure projects as well as in the context of real estate projects. There is a belief that real estate is now turning around. If share market is the real barometer of the economy to happen, then real estate is showing signs of improvement. Whether real estate will get its due share from this budget or not, my view is that as far as growth is concerned, real estate will certainly get its share. The international movement of funds, as we must be aware, is largely in favor of the emerging economies, largely in favor of the developing economies. In last many decades, which have gone by and which are likely to come, we would be able to see that the interest rates in advanced countries are always low and lower. You don't get interest on higher amount of higher rate on fixed deposit. In many countries, the rates are negative also. That is likely to continue. I have been given limited time, otherwise I would have explained the fundamentals that this has to continue despite whatsoever government steps that may happen. And because interest rates are lower, coming to the conclusion, and interest rates are always going to be higher in the developing economy. When demonetization happened, many people used to talk that now supply of money in the bank account is increasing, so rates of interest will reduce. But I had taken a view in many of the conferences that this interest rate will not reduce in India beyond a particular limit because of the absence or inadequate social security schemes in the country. Government has to protect the interest rate that is on deposits. When deposit rates are protected, the loan rates have to be on the higher side. And therefore in India and in developing countries, only those businesses continue which have higher rate of interest, higher rate of return. And therefore, the advanced countries are always eager to come to India and invest their funds because funds will get higher rate of return in India and other developing countries. So while the funds are eager, at the same time, in the context of real estate, the RERA has done substantial favor in attracting the foreign direct investments. But that is all for the investment in real estate and for the encouragement in the investment. Real estate industry, to our understanding, today also gives substantially higher returns than many other industries. But this is all for the construction activity, developmental activity, whether the demand is there or likely to be there. Here lies, according to me, sir told me, Nagawekarji also told me to mention the minus points also. These are not the minus points, but these are some of the apprehensions which are building up very fast in the economy, that whether demand will be there or not. After Corona, there is a lot of reorganization in the industry. The organized sector has been growing very much. The unorganized and semi-organized sector has gone down. So the poor and middle class have suffered a lot. Whenever there is an inflation, it is said that the gap between the haves and have-nots will go on increasing. So it is in this context that whether poor and middle class or new or rich class will become capable to buy the properties. Add to that, second aspect is, before many years, one used to always think, let me buy the property. Even at that time, friends, if I put my 2 crore rupees in bank fixed deposit, my interest was higher to meet the rent. I could have saved. But why I was buying the property? Because there was appreciation. But in last 1 decade or so, either appreciation is not there or very less. And therefore, now on the lines of US and other advanced countries, one has started thinking whether it is necessary to buy the property or not. In that context, Government of India is already encouraging the rental, and model rental act is also there in place. But suffice to say that demand for the real estate is going to be the big aspect. In that context, if the multinationals come to India, if the foreign investments come to India, then industry will bloom like anything, because as you are more aware than me, real estate has direct correlation with the development of the economy. And today, before I come to the taxation factors, today the risk factors to the economy, progress of the economy are dollar strengthening, rupee weakening. So less encouragement to foreigners to come and invest in India. At the same time, plus point is today in India, the taxation rate for manufacturing investment is the lowest in the world. 15% only income tax if I want to invest in a manufacturing industry. With surcharge also, it hardly raises to 17%. As against that, the inflation is going to be a big factor because today fuel prices are rising like anything. As on today, because of the purchasing power available with the people, the companies are able to pass on the input cost into the prices, and the prices are rising. But time has come that this price rise will not be acceptable to the people. And in the socialistic India, capitalistic country that the India is, inflation cannot be taken lightly by the government for its survival and for the strength of the economy. So the risk factors are fuel, the risk factors are dollar strengthening because of US economy strengthening, and therefore only if the foreign investments come in the larger area, not only in the real estate. Real estate, it will come to build, but this building will be sold only if the other economy is growing. So whether other economy has grown so fast, very well. But now the time has come that the foreign exchange reserves have started depleting, which was our main point. And therefore inflation, according to me, is going to be a very, very important area which will deal with the economy to grow. And unless the economy can grow, the real estate cannot grow. As far as budget representation was concerned, as was desired by R.N. Gupta sir, we had represented at the Finance Ministry. And for the post-budget, one of the main points which can be considered that in the context of affordable, we have taken a firm view. And there was good listening by the Finance Ministry department also, that affordable, the benefit is given because of the drafting of the law, that developing and building the affordable houses, which should be amended, developing, building, and constructing the affordable houses. Because in many, many cases, the developers and builders are not there at all. Directly contractors are constructing by being employed by the landlords. There is no contract, there is no developer builder. In other cases also, if the affordable houses are to be encouraged, then why not to give benefit to all the players? Then only the sector will grow very fast. And therefore, there is a far good case for the contractors also to get the benefit. Now coming to the direct tax proposals, as my good friend Raveendaran ji is going to address on the GST, there are not so many direct tax propositions which are directly linkable to the construction industry. But as we know, that real estate industry players, the builders, developers, contractors are also taxpayers. So those taxpayers who will be affected, which are the vital amendments which are proposed, which will affect these players, builders, developers, and contractors. I'll touch upon some of them. And if time permitting, we can go into the question answer also. There are propositions in the Union Finance Bill, some of which are leading to ease of business, and some of which are leading to increased litigations and increased problems and harshness to the taxpayers. Let me deal with the positive ones first. That the concept of updated return, which was always canvassed by the professionals, is now being introduced. In a manner that if a taxpayer realizes that he has made some mistakes, he has not filed the return which was fileable, then the time for revised return is very limited. And therefore, under the updated return, they have now provided 24 months from the end of the assessment year. So this is a sizable period in which either I can decide I had not filed the return, but let me file the return because there is taxable income. I had filed the return, but there are some mistakes and it requires updation. And as the name suggests, it is updation only. If I have forgotten to claim loss, this is not an allowable scheme to me. If I want to demand a refund which I have forgotten, this is not an allowable scheme. If I want to increase my refund, this is not an allowable scheme. There are many limitations and there are many riders, but subject to that, this scheme is a good one. But the main limitation of this scheme is that if I want to file the updated return within first 12 months of the end of the assessment year, then whatever tax is normally payable by me, plus 25% additional tax, and not ending that, plus interest under section 234 capital ABC, So this will make approximately, to our understanding, more than 50% additional tax, which makes this scheme not so attractive. So only those people who are feeling the pinch and who may have higher apprehensions will come forward in this scheme. And if I want to file the updated return after 12 months and within 24 months, then the additional tax is 50% plus this interest. So it will in addition to normal taxation. So the limitation is being there in the context of taxation, which is very demanded on very higher side. The another aspect which is being introduced is a far welcome aspect and which will reduce the litigation and also hardships to many appeal cases, which is a litigation management. Hitherto under the Income Tax Act, in my own case, if there is a High Court or Supreme Court judgment in my favor, then department was not filing the appeal on the same issue for the subsequent assessment years by taking appropriate permissions. But that was only in my own case if the High Court or Supreme Court judgment is already in favor of me and department has gone in appeal. Department has gone in litigation. Now, this principle is being extended to all the SSCs across. So what will happen that I have won the case at Commissioner of Income Tax level. Now, on this case, CITA decision is in my favor. Whether department wants to go in appeal, whether department should file case with the tribunal, at that time, the collegium will decide whether the similar legal issue is there across the country at High Court or Supreme Court, and whether any SSC has got favorable judgment. Then I will also get the benefit of that favorable judgment, even though it is not in my case. So what will happen? The collegium will take permission from the department that in this case, we are not filing the appeal for the time being. Only since the department is in appeal at the High Court or Supreme Court, so far the judgment is in favor of SSC. Only if the department succeeds in future, at that time case will be filed against me. So what will happen? If the case is not filed against me, then temporarily, for substantial number of years, I will not be subjected to unnecessary taxation, unnecessary recovery proceedings and all. And this is going to be a very sizable benefit to many litigation issues which always go on rising because of the kind of the planning which the taxpayers want to do and the kind of the approaches with the revenue department adopt. Then I think a very important amendment, which I have always emphasized, I can tell you that I must have addressed maximum number of meetings of commissioners of income across the country on real estate taxation, Hindu laws taxation, etc. And in those meetings, one of the issues which was discussed was that in the context of builders, developers, and some contractors also, many irregularities, illegalities happen while seeking permission and while not implementing the permissions, while not implementing the rules regulations. But in the context of such illegalities and irregularities, there are provisions by which compounding is possible, by which higher premium payable, higher fees payable, and the issue is resolved. Now these are all the payments in the context of my not following the law. This is one issue. Second issue is that hitherto it was possible to take a professional view that okay, corruption is a disallowable expenditure. It is prohibited by law. So under explanation to 37(1), it is disallowable. So I cannot give a bribe to an officer. But can the SSC do a thing like that? That the SSC will engage an intermediary, will pay the fees to that agency, and that agency will do liaison. How much money that agency has spent is anybody's guess. But as far as I as an SSC is concerned, I have not done any corruption. I have only engaged an SSC intermediary and paid the fees, which is a legally allowable expenses. And this issue has been exemplified by the amendment in the finance bill with reference to doctors. That in the doctors' rules and regulations, taking cuts, etc. is strictly prohibited, but still doctors are taking. And in that context, the amendment has come, but the amendment is very wide. While the example has been taken of doctors, but the amendment is across. That any act which directly or indirectly also is connected with the ultimate corrupt act will also be disallowed, and that expenditure will be disallowed. So the scope of disallowance in explanation 1 to 37, 1 has been further increased. In the context of TDS on transactions of immovable properties, excluding agricultural land, the TDS limit is on the threshold above 50 lakhs, which we are aware of. Hitherto in the TDS provisions contained in section 194, capital IA, it has been provided that if the actual consideration is exceeding 50 lakhs, then only TDS 1% applies. So for example, in a sale transaction, the consideration is 45 lakhs. Stamp duty valuation is 60 lakhs, but TDS does not apply as on today because actual consideration is 45 lakhs. Now they have proposed an amendment that not only actual consideration, but stamp valuation also will be considered, and TDS will apply on the whichever is higher. So like on the lines of 56 to 50C, 43CA, in all these cases, stamp valuation or actual consideration, whichever is higher, that concept is now being applied in the context of TDS also, that if the stamp valuation is higher than 50 lakhs, then TDS will apply, even though the actual consideration is less. And I think far more important provisions touching the SSEs, and more importantly, those SSEs which have recorded loans, gifts, and other credits in their books of account. But remember, futuristic only. If you read the amendment, it is applicable only from assessment year 23-24. So financial year 22-23. Past cases are not covered by this amendment because the amendment is very, very harsh. Hitherto, under section 68, it was sufficient for me to prove a loan, to prove a gift or other credit transaction just by giving the identity of the money giver, that is creditor, lender, just by proving that he is a credit-worthy person, and just by giving his income tax details. Only in case of share capital being collected by closely held companies, the source of funds was also to be proved. Source of funds means the giver has brought money from where. Now that concept is being extended to all across the loans and gift transactions. This will create much hardship because somebody is lending me money. I may spare off after repaying. The income tax will come after 2 to 3 years. There might be some displeasure between me and him. If the creditor at that time does not cooperate, then the addition is in my name. And you must be aware, since 2016 afterwards, the taxation under this is 115 BBE, as much as 67% minimum. So the loan giver, if somebody has given me gift, now he will also have to prove that from where he has brought the funds. So source of funds has become now necessary in the future transactions as far as loans and other credit entries, including gifts, are necessary. Gifts are important. Therefore, this is going to create much hardships. Already there are so many litigations in the context of 68 and 69 and variants of 69. Now the litigations will far more increase in this context. And another very regressive step is just last year, as you are aware, that the finance minister very boldly presented a speech that I am reducing now reopening, reassessment period only to 3 years. So earlier time period of 4 to 6 years was removed, and in majority cases, the time period was restricted to 3 years. Within 3 years, the assessment was becoming final for reopening also was not possible. And only in the cases where more than 50 lakhs concealment, and that concealment represented by concrete asset, then 3 to 10 years time limit applied. Now they have amended this or proposed to amend this provision so much substantially that practically 3 years time limit is very high was. In many cases, it will become 10 years. Because in addition to the asset, they have increased all the scope by writing expenditure. So they will write somebody's marriage has taken place, more than 50 lakhs have been spent, although no asset, but expenditure, and so much information has been included in this that the reopenment and reassessment will increase. Already the tax professionals and some of the taxpayers who have suffered know that so many cases get reopened and reassessment, and there is no finality to the assessment. One more positive amendment, President Sir, that in our budget presentation also largely we had represented that more businesses are happening, not in partnership, but in AOP and joint venture. Joint venture is far better as script than the AOP also, because AOP, the taxation rates are higher. In joint venture, in most of the cases, if the documents are drafted properly, then JV has to pay zero tax.
Zero tax.
But in all these cases, JV partners will pay the tax, sir. JV itself will not pay the tax, subject to the principles being followed in documentation, in facts, and in law. But till now, in most of the AOP cases, the department was making the transaction subject to TDS at the highest rate. Now they have accepted this representation. BI certainly made this representation, many others also might have made, but it was BI's strong representation that reduced the TDS rate in case of JV transactions. So in cases of all AOPs and JVs, wherein the JV partners, the AOP partners, all are companies, in those cases, the TDS rate is proposed to be reduced to only 15%, which is quite a tolerable rate in such transactions. And this is certainly a positive thing. Then, if I have time, then I have some very striking views or unique views, which may be presented in 5-10 minutes, subject to the permission of Rihwani ji and the chairman of the session. May I continue, or time is a constraint?
Yes. Tarun ji,
yes,
webinar is being conducted by me.
Sir.
Nagawekar, yeah.
Nagawekar, sir.
Oh, okay, you can continue. But
sir,
now actually
the time is book. Where time is book?
Huh?
Speaking of time is where Mr. Pradeep ji?
Yeah, actually it was 40 minutes. It is nearly completed. But we can give another 10 minutes, because this is very informative sharing from him. Please, sir, continue.
Sir, I will make one-liner only. Under the whenever there are partitions of family, including by corporates, family arrangement is the most taken recourse to. But maximum litigations happen in family arrangement because law is not properly understood and facts are not put in place. And family partition and family arrangement are different concepts. And family arrangement is not only applicable to Hindus, but it is applicable to all the religions. Although there is no direct provision, but the law has evolved that by virtue of family arrangement, entire partition of the family and all businesses can lead to zero taxation only. If you are doing family partition, then the law is constrained that you have to do full partition only. But that full partition also can be sidelined legally by taking the recourse that you want out of 6 brothers, only 3 are partitioning. Then first make partition of all 6, then reunite 3. Reunion attracts no stamp duty, no taxation. Sir, there is a section 281, which is directly connected with the immovable property transactions. We have so many cases that transactions happen without taking cognizance of 281. And thereafter, it is realized that income tax proceedings were ongoing and the transaction is considered void by the department. Therefore, in bigger transaction, like one gives public notice, one takes title search, etc., we always also ask that it is better to tell the party, the vendor, to obtain certificate under section 281. I could have given 2 or 3 very striking examples in which SSs are so smart that even 281 search also can fail, and how to take care of such situations. But suffice to say for the time being that 281 search is very, very important. Then what we believe, sir, that in Indian conditions and in many developing countries, if transactions are happening crores of rupees, But when it comes to professional fees, one becomes miser. So one makes stereotype documents, which are not really capable of protecting the documents in the difficult times. Let me tell you a small example. There is a trend that if I am buying a property which has already loan on its own, then the vendor will tell me that you first pay the money payable to the bank, so documents will be released. This is not at all necessary. We have done number of transactions in which we tell the vendor that we will not pay you. You enter into the agreement, and by taking inspection first with the bank, we verify the documents also, and the purchaser can directly make payment to the vendor, to the banking agency. In the context of development and redevelopment agreements also, we have seen that there are many stereotypes which are based on property laws, whereas in drafting of the redevelopment and development agreements, more cognizance is needed of the construction laws. For example, in most of the development agreements, bank guarantee is there. Now, banks do not have any specific guarantee. Banks' performance guarantees are not workable in the redevelopment this thing. And therefore, it is very necessary to prepare ironclad bank guarantee if the interest of the landlord, the society is to be protected. When it comes to changes in the plans also, in the most of the development agreements, plans cannot be changed, but still, if the developer wants, the plans are changed and the society landlord does not have much control over it. So a methodology has to be found out by which such control can be exercised. And there are many Bombay High Court judgments also in the context of this thing. Let me give another stereotype that in drafting of the will also very casually one makes a list of the present assets and liabilities. Whereas one should realize that these are present. Will take effect maybe after 5 years, 10 years, 15 years. And at that time, the assets and liabilities might have changed. So unless the will is taking into visualization of all these possibilities, the will fail. Generally, there is a tendency to delay the will, and many times it is not made also. Once it is made, it is not possible that every now and then you go on changing it. So drafting of the will and any document like development agreement, which has longer duration, requires lot of visualization. And in India, if you take cognizance of only property law, then document may be lopsided. One has to take cognizance of all the revenue laws, and one has to take cognizance of many other laws also, and then only document should be drafted.
Tarun, please.
Yes, sir.
Start on your end.
I'll stop here.
No, yes, within a line or so.
Okay, sir. Okay.
Are you stopping?
Thank you very much for giving me this patient hearing.
No, absolutely. It was too informative and knowledge sharing. Now I call upon Raveendaran sir. Yes, you are there. Please unmute yourself. Floor is yours. Raveendaran, yeah. Please unmute. Madhu, yeah.
Yeah.
Yes.
Respected President Shri Ram Gupta ji, General Secretary Shri Pradeep Nagawekar ji, office bearers and the senior members of the prestigious BA, Shri Tarun Ghia ji, my senior and BA Direct Taxation Committee Chairman, Shri SD Kannan, Co-Chairman Taxation Committee. Good evening to all. I take this opportunity to thank all the office bearers of BA for arranging a nice Zoom meeting in respect of Union Budget 2022 versus construction industry. I'm going to talk on important indirect tax proposal in the Union Budget, which generally covers our construction industry. My good friend and senior, Shri Tarun ji have explained in detail about the growth of the real estate industry in global perspective. His length experience have thrown a light on various different aspects, not only in an investment point of view, but also in various other avenues. He has very nicely updated the direct taxes proposal in the budget. In the budget 2022, there is no reduction in GST rates, no new cess, no new exemptions, no big reduction in excise duty. GST collection during January 2022 has touched a new peak, and it is a record collection of 1.38 lakh crores since inception of GST with effect from 1st July 2017. In respect of GST, we have submitted a pre-budget memorandum on 15th November 2021. In our pre-budget memorandum, we submitted 17 points. After the above 17 points, 3 points are taken place in the budget, but the output is not in our line of request. The 3-point requests are: point number 3 in our memorandum, loss of input tax credit because of non-compliance by vendors and subcontractors. Point number 4 in our memorandum, ITC restrictions based on GSR 2B. We requested for punishing of the recipient for the mistake of the supplier is not reasonable. Hence, we requested the input tax credit should be allowed on the strength of the original tax invoices. But in the budget, it is considered in different point. Point number 15, we raised it in our memorandum, is clarification and the definition of government entity as introduced in the notification number 31 of the central tax rate dated 13th October 2017. The budget proposal attraction at all the assessees mainly on input tax credit. Input tax credit can be availed by the contractor, promoter, or all the assessees. Only the suppliers have filed the returns and it is passed to the contractors. If the supplier is delayed in filing the return, the contractor or the promoter or the assessee cannot take the ITC. Even the contractor has fully settled the payment of the supplier. Hence, the contractor and promoters has to follow the supplier and see that the suppliers are filing the returns regularly and paying the tax properly. Contractors are purchasing high rate tax materials like cement, steel, electrical items, plumbing materials, and other items. The budget section, so 41 of the CGI Act is substituted. The amendment is as follows. Every registered person shall, subject to such condition and restrictions as may be prescribed, be entitled to avail the credit of eligible input tax as self-assessed in his return, and such amount shall be credited to his electronic credit ledger. Second point, the credit of input tax availed by the registered person under subsection 1 in respect of such supply of goods or services or both, the tax payable whereon has not been paid by the supplier shall be reversed along with applicable interest. Note that point, along with applicable interest by the said person in such manner as may be prescribed, provided that where the said supplier makes payment of the tax payable in respect of the above said supplies, the said registered person may re-avail the amount of credit reversed by him in such manner as may be prescribed. The above provisions are applicable with effect from the Act after getting the assent of the President. It is an additional restriction. Already a lot of restrictions are available for availing input tax credit. It is an additional restriction on availing the input tax credit. Even the point to be noted here is, even if the supplier has filed his GSTR1 and invoices are reflected in GSTR2B form. But if the supplier has not discharged his liability, whether by paying tax or adjusting the ITC, his liability in GSTR3B, the contractor or the dealer or the promoter has to reverse the credit availed along with interest applicable penalty. Interest is to be paid along with the applicable penalty. The reverse credit can be re-availed by the contractor at the time of the supplier discharge his liability. It can be re-availed, but our question is, when is to availed? The time limit for re-availing the credit is not clearly, I think it is not clearly spelled out. It may be a subject for clarification. Next amendment is, it's a positive amendment. Section 50 of the CGS Act is amended. retrospectively. If the ITC is availed and not utilized, then interest will not be applicable. Right now, a lot of trustees have received notice and they started to issue orders. But this is already council meeting, it is decided. Now it's a section itself, it has brought in. Interest will not be applicable for ITC availed and not utilized. Amendment to section 47 of the CGST Act 2000 is like in our existing provision for late payment of CDS in the Income Tax Act. The levy of penalty of 200 rupees per day. It's they have prescribed for various returns. Now, presently, the TDS returns, TCS returns. TCS returns, presently, the government and government related authorities, they are deducting TDS. For that, they are filing return belatedly. For that return, if they are not filing belatedly, the 200 rupees per day will be applicable. The following return dates are shifted from existing September to November of the following year. So presently, if you are filing a monthly return, if any input tax is not properly taken care, it's due to some other reasons. If you are not able to take credit on 31st March, it can be taken up to September, 30th September, or filing of annual return, whichever is earlier. Now it is shifted from September to November, 2 months. The same thing for TDS returns can be rectified. If the government presently the TCS return is applicable for government oriented payments. If there is any corrections, that can be rectified up to September. Now the time is shifted to September to November. See, it is dealt in section 52. Likewise, the availment of ITC. For availment of ITC also, if anything is missed out in our financial year, it can be taken up to 30th September. Now it is shifted to November. This is dealt in section 29. Likewise, the tax liability against issuance of credit notes. Now, if you are credit notes for sales, if you are giving any credit note, it should be adjusted before September. Now the time is shifted to November. It is a positive outcome. So the one more important amendment is, earlier if a return is filed, we have to file return every month. Suppose if you are filing GSTR1 and you are missed out to file GSTR3B, you can file for some subsequent months, 3 months, 4 months, even it is delayed. That portal is allowed to pay. Now they have made it very clear. See, if any earlier period return, any one return, GSTR3B or GSTR1 is to be filed. If any one return, both returns are not filed, for subsequent month, you cannot file the returns. So you are supposed to file, you can make delay only for 2 months returns. If you are filing GSTR1 or 3B for first month, you can file subsequent month, you can file only one return. If you are filed GSTR1, you can file the GSTR another month. For the third month, you cannot file return. So mandatorily, you are supposed to file the returns every month. So these are the major issues covered in this budget. Other things are very useful. So these are the major impact of this budget proposal. So many of our members are asking clarification regarding this notification number 15/20, which relates to government authority and government entity. I think we can have a small light on this. A lot of things. So many of our people are not getting clarity on this point. So presently, GST rate applicable for works contractors, normally works contractors and platforms are 0%, 5%, 12%, 18%. So far as 18% is concerned, there is no issue. So it is a maximum rate for the contractors or promoters. So we are supposed to pay that amount. The GST is paid, normally levied on the contractors or promoters on 2 bases. Recipient basis, who are receiving the services. Second one is activity basis. In the case of recipient basis, the service is not at all a criteria, only activity. So for recipient basis, government related works and other government related works, we have to segregate. For government-related works, there are 6 categories. One is central government, second is state government, third is union territory, fourth is local authority, fifth is government authority, sixth is government entity. First category, there is no change. Before this notification number 15 for 2021, and that got implemented from 1/1/2022. So central government, state government, union territory, local authority, the 4 cases, there is no change. Before January, what you are paying, the same rate will be continued. The change is governmental authority, government entity. See, these 2 is shifted from 12% to 18%. This is not in budget, but it is because of the notification. It is a current issue. A lot of our members are missing out, not able to follow up with the concerned departments. They started to raise a lot of queries. So already we discussed with our respected president. So we have to get from the government who are government authority, who are the government entity. That list we have to get it. That is a very, very important issue. All the people across the country is facing. So even the departments, they are not, why should I give, why if we are going for officers, it is your duty, you have to search like that. See, some officer without knowing the fact, they are telling. See, some officers tell, where is the notification? We have not given any direct notification from the government. So it is not applicable to, like that they are telling. So I requested our president to take care of this issue. We have to go to the government directly. So we have to make, so the government has to come out with this list, our frequent interval, say 2 months time or monthly time. At least at present, we are getting this list that will be comfortable. For this, already we have sent a letter to 63 personalities, government authorities. So including all finance ministers and chief minister, then revenue secretary, then we applied to everyone. This is the burning issue. So it is presently it is started to come. So yeah, as a BA, so the only solution is BA had to take care. See, each and individual small starting from small contractor to big contractors, they are facing the issue. We have to take some effort for these issues. See, we already submitted a memorandum, 18-page memorandum, consisting various issues to the 43rd GST Council meeting held on 28th May 2021. So out of this, so the 18-page, we covered major areas. So you see, even right now, the problem is, even it may not be related to budget proposal, but it's our burning issue, which we should, little bit, we have to take care of this issue. One way, see, we requested for GST rate reduction 18% to 12% for private construction project. So if now the government is started to give even government entities started to go for 18%. So this question, I think we have to utmost take care to represent before the government regarding this point. But other important point is reversal of ITC for non-payment of consideration within 180 days. If you are not making the payment to the supplier, so we have to reverse the input tax credit within 180 days. Our government work is getting delayed. Our projects are getting delayed. We are not able to sell the projects. See, our government is not able to give the money within time. Most of the contracts are giving, but see, it is. See, we are duly discharging the tax to the government. There is no pending due to the government, but the government is giving. See, the reversal of ITC for non-payment of consideration within 180 days. This is very, very burning issue. So it will affect all the contract, all the across the country. So if the government payment is pending, see, the government, if they wake up in the issues, so to some extent it is comfortable. But it's a mutually contractor, subcontractor, they are having the perfect understanding. So they are ready to accept for beyond 180 days. But this government is intervening, you should pay 180 days, otherwise it will be subject to reversal of input tax. If you are reversing, means 6 months you have to pay interest. So 18% is a very high amount. So if you are paying interest voluntarily, if you are reversing, you have to pay 18%. If the government, after giving notification, it may come 24%. So minimum, it's going a very huge money. So it needs our attention, and we have to represent before the government. Then second one is deduction of TDS on advances to the contractors. For supply of material, there is no TDS on advances. But advance will be adjusted very shorter period. So without any rider class, simply that all advances will be subject to tax. Say 3 months advance, 6 months advance, like that we can ask for the government. So short time advance, it may be, there need not be any TDS. See, for a long time advance, if the purpose of advance may be getting deviated from the taxation, it may be okay. Otherwise, if for small advances, short time advances, everything is subject to TDS. It is a lengthy process. There is a mismatch. So even government is deducting TDS on certain point. They are remitting TDS for 3 months, 4 months time. So now we are, see, if it is 100 crores work contract, so we are getting a bill for 10 crores. That government is after 2 months or 60 months only that they are started to paying the tax. The TDS is also getting delayed for 6 months. So there is a mismatch. So if it is within the year, so to some extent we can justify. For a month of March or February, it will be paid in subsequent year. Financial year is switching over. So what is happening is for the 2 financial years we are getting notice. The notice is coming with a huge money. See, for 10 crores involved, see, TDS is perfectly matched. See, all the scrutiny and the notices are coming in online only. We get to submit online. The officers are not able to they reconcile our reply. So this needs some attention. Then second, next point is refund of IT should be allowed as inverted duty structure refund considering IC on account of services. So in other cases, the goods and cases, we are comfortable. We are now the 12% become 18%. If you are taking a contract from a government and you are making a subcontract, the second line, third line, so input will be 18%, output will be 12%. It is a huge money. So this needs attention. Finally, see, we in our representation, we asked for this clarification of definition of government entity. In our submission, in 15th November itself, in pre-budget memorandum itself, we asked for that clarification. But government has modified the section, that the notification, the section itself modified, it is 18% now becomes. So we can go for this government entity and authority. These are my small submission.
Over, sir?
Yes, sir.
You are over?
Yes, sir. Oh, it's over.
Thank
sir.
you.
Over, sir. Okay.
Mr.
Thank you.
Goragol is also there. Mr. Goragol is also there. Co-chairman, indirect taxes.
Let me see.
He may be there.
No, Gaurav is not there. Means he may be in some other name.
No. Shall we start a question and answer session?
Yeah, please. And
if he is available, please raise the hand.
Yeah.
Nagawekar sir, please request, raise the hand in the app, using the app.
Friends, I'm requesting you, those who have any queries regarding...
Pradeep, any co-chairman want to speak anything? Please give the chance and then question answer.
Acha, Mr. Kannan, Mr. Naresh Grover.
With their queries, they can discuss, no? Any co-chairman wants to? Kannan sir? Are they? Naresh Grover ji?
Naresh Grover ji is there.
Unmute karo unko.
Naresh Grover, unmute kijiye khud ko. Grover sir, you can unmute yourself. He is not responding.
No. Okay, then so we'll go ahead with President sir. We'll go ahead with.
Go ahead.
We'll go ahead with question and answer session.
Yes.
I'm requesting all who are here participating in this session, those who want to ask any question or they have any queries, please raise the hand. Not physically, they can put their question or queries in chat box, or they can raise the hand through their app available on their laptop. The questions which are received here, I'm just bringing it to your notice. Raveendaran sir and Ghia sir, please. What is the percentage of tax included in construction assets income? And discuss more about the all included taxes in the construction business. Yes, one of you.
Pradeep sir.
Yes.
I am not having the chat box just now available to me, so I will understand from you only.
Yeah.
What can you means? I could not grasp the question.
What is the percentage of tax included in construction assets income?
Now, percentage of tax included will be probably on GST side, because income tax is after the income is earned and only if the income is earned. In fact, just suffice to say that in India, indirect tax is more direct and direct tax is indirect. Because if I earn income, then only income tax is payable. Whereas indirect tax, it is so called, but it is directly payable on the works. So I think a question may be considered by Raveendaran ji.
Yes, sir.
Yes.
But normally, if it is a rental income, the GST will be 18%. If it is a rental income, property income, it is normally 18%.
Construction assets. Can you discuss more about all included taxes in construction?
Sir, for works contract, 0, 5, 12, 18. Four categories there. Now 0 and 5, most of the 0 and 5 related to non-governmental works. This entity, 0 works, it is purely labor work. Only a single house labor work. Zero rated. This is 0 rated. 12% normal, all government, central government, union territory, local authority, it is 12%. 18% other than the above is 18%. If now this government authority and that authority is also coming under 18% category. These are the 4 categories for the promoters and contractors.
Thank you, sir. Thank you, sir.
Yes, sir.
This may be related to Tarun ji, your arena. What is the specific, any impact on redevelopment?
What is the specific? Any
impact.
budget.
What is the impact of tax on the redevelopment?
Okay, what is the income tax? In fact, I can say that the first judgment in Mumbai that redevelopment can attract 0 tax was argued by me in the case of Shailaja Cooperative Society, Ghatkopar, where for the first time tax was brought to 0. Even Supreme Court has said that in the cases where there is no cost of acquisition, the tax can be 0. So we are applying the judgment of B.C. Srinivasa Shetty in drafting the redevelopment agreements in a manner that the document clearly brings out that if I have transferred the development rights and the development rights I never acquired, and therefore the cost of acquisition of these development rights was not there. Mind well, cost of acquisition not there and nil are different concepts in the law. If it is nil, it can attract tax, but no cost of acquisition does not attract tax. And therefore, many of the redevelopments have attracted 0 tax also, but many have attracted tax also because specific, there is no provision in the Income Tax Act whether it will be taxable or not. It all depends upon drafting of the documents and how the scheme is arrived at.
But GST is applicable to the on the area that is given, surplus area given or extra area given to the land flat owners, I can say.
No. In fact, another judgment which is a unique judgment that I brought to the tribunal's notice that even though property stands in the name of society, society is not the true owner of the property. Aerovilla Society, Santa Cruz 10.26 or no taxation was applied. And when it comes to members taxation, you will kindly appreciate that the old flat outgoing and new flat coming under section 54, 54F, etc. If the investment is in the new residential flat within 3 years, then it can attract 0 tax. So once again, in the hands of members also, it can go as tax-free.
GST impact about landowner and developer? Clear the detail of joint development.
Chalu karo. Yeah.
Tarunji.
Sorry, sir. My charging is 1%. I am unable to charge in the absence of power.
Is there any hand raising, Madhu?
Yeah, Mr.
Anand Gupta.
Mr. Ram Bhatia.
Yes, Anandji.
Mr. Anand Gupta. Unmute yourself, sir.
Anand, please unmute. Anandji, please unmute yourself.
Yeah.
Sir, my question to Tarun Ghia ji.
No,
Sir,
Mr. Tarun will not be able to answer your question. He has left. He has some power supply problems.
So let my other speaker.
Power supply, he may come.
Please go ahead, sir.
Anandji, you please put your question. It may be, if possible, maybe replied by Raveendaran sir.
ठीक है. Sir, Raveendaran ji,
tell me, sir.
Modi government has been talking all the last 7 years that housing for all by 2022. Earlier they were taking, now they are talking about 2024. In your opinion, what are the provisions which makes this to happen? Which clarifies that those actions will be bring this thing to happen. This is my one question. This is my one question. And my second question is, see, after budget and during budget as well as after budget, in all the interviews, when the question was put up to Finance Minister, Sitaraji, that why did you not give any direct relief to taxpayers or any relief in taxation to people? And instead of that, you have, though you have given a sufficient funding to national and the highways and water supply tap to everybody.
Absolutely.
So she gave some justification that this is having a multiplier effect. What exactly is the how it functions and how she justifies this?
Yes, Raveendaran sir.
Yes, sir. So Tarun gets joined, sir. Whether I have to answer, Tarun will. So he will have some more light on this thing, no? So I will talk about provisions and other things. Tarunji, no, he's having a very close association with leading people, and he's. I think he will be betterly answered than me. So sorry, I think he has come in line, no. Otherwise, I will tell.
Yeah.
Tarunji,
Madhu,
Tarunji,
please contact Tarunji.
I heard you partly, sir. Can I have the opportunity of once again hearing the issue?
Yes, sir. My first question is, Modi government in last 7 years have been talking all the time as a political slogan that housing for all, and they have been claiming that we have made this much house, that much house. But what budget provisions proves that they are very sincere and they are making this thing to happen?
Sir, in fact, like you also, I am also wondering that whether the housing industry is growing or not. First of all, to my understanding, affordable housing is certainly growing. When it comes to non-affordable, the houses which were unsold, the inventory has certainly reduced post-corona. But directly, there is no provision which will boost the construction or sale of non-affordable houses. There is no specific provision. Therefore, I tried to say in my humble way that whether the real estate industry, the housing industry will grow or not, that all will depend upon whether the common man starts earning sufficient income post-corona or not. I also would like to throw light that as far as commercial premises are concerned, that will be 100% dependent upon multinationals coming into India or not. Because if multinationals do not come, then probably commercial premises will not, the construction of the commercial premises will not grow in line of the expectations. This is my view, sir.
Anyway, sir, my second question was, that during budget speech and even after budget speech, during all the interviews on the TV channels, our finance minister, she just when the question was put up to her, okay, why did not give any in taxation or even increasing the interest part for home people, or any direct relief which gives the money in the hands of the people. And as against that, you have been given a lot of fund to national highway, water tap. So she was justifying that this is having a multiple effect. What exactly that effect and how it is more beneficial? At least see, general public who are actual their voter are definitely disappointed that they wanted a direct money in their hand or relief in their hand, not because they don't understand this language. So what exactly, how it works and whether she is really justified in that.
Not only understanding wise, Gupta Sahab, I fully concur with your view, because not only there is disappointment, there is no direct money in the hands, but you take the example because of the reduction in the corporate tax and because of the infrastructure boost, the industries will be growing. But as a common man, my taxation rates have not changed. I am suffering from inflation. So if everything is rising, including inflation, then my threshold limit also should have increased as a common man, which was the very logical expectation by a common man, which has not materialized, unfortunately.
Oh, Secretary Sir, Mr. Rambati.
Sir, what is this multiplier, so-called multiplier benefit she is talking about?
Sir, multiplier, I think, is quite evident. For example, let us take an example of an infrastructure industry. So government spends 100 rupees. That 100 rupees goes to contractors and to workers, etc., which in turn will spend 90, which in turn will spend 80. So the more the money goes in the hands of real workers and businessmen, come, which in turn spend. So multiplier effect of capital expenditure is a proven fact.
Thank you. Thank you, Tarun.
Thank you.
Rambatiya ji.
Yeah. Am I audible?
Yeah, you are audible.
Tarun ji, my one question is that this 48,000 crores made for 80 lakhs houses and the PMAY Yojana, how do you think it is possible in 1 year 80 lakhs houses to be built in this budget that they have made a provision? Do you think PMAY through all state governments, it is really performing in that manner so far? Any statistics they have or what they have done in PMAY schemes earlier in number of years? Any idea about it?
Sir, I fully concur with your view, and query is very logical. Pradhan Mantri Awas Yojana, something like that.
Yes.
With with the knowledge of Indian systems, whenever a benefit is meant for a common man, to what extent it really reaches to him and to what extent it reaches to him on paper are a very big question marks. And it is also a very strong view that compared to central government, when any state government is involved, the more money goes into intermediaries and in the systemic manipulations. So to my understanding, sir, how much affordable housing is really happening? Why? How much these schemes are actually being implemented? How much they are on paper and how much they are on reality? That I think you people know more, and I am only a very layman in that context.
My next question, Tarunji, is there's a very novel thing which I read about this ACZ. They want to transform ACZ into a different module And then I learned that in SEZ, in all over India, all the SEZ sanctioned so far, 20,000 hectares of land is lying vacant, totally and unused. And some 10 crore square feet of space already constructed is also not being used in the SEZ sector all over India, whatever they have done in last so many decades in SEZs. There's a very good scope of the government to tap in that direction, which they have not, of course, brought any scheme in this budget. But to the figures which I read in the media, it is very startling that these SEZs have not performed at all in the direction in which they were supposed to, because of so many restrictions of the Indian manufacturers or manufacturers of India, and the Indian industry were not being allowed. Hello?
Hello.
Who is
Hello.
talking in between?
Please go ahead. Please go ahead.
Go ahead.
I want to know whether you have any, you applied your mind on that SEZ, which is announced in the budget about the new plan the government of India wants to bring. And unused space and unused land is lying, which is a very large extent.
Sir, my limited exposure to these aspects is something like this. That in the SEZ laws, if I want to have a unit, while on the one hand, I'll be paying like an ownership premises, but on the other hand, I'll get only leasehold rights. They are so much rule bound and rule ridden that whenever we try to do some tax planning, etc., and feasibility reports, the feasibility reports were becoming very, very unviable in some cases. Because the manner in which government has structured the scheme, with so much taxation on that, the developmental expenditure and the maintenance expenditure, in many cases, we found that a person will do better by buying the premises outside the SEZ in a developed area rather than in the SEZ, which is primarily not so much in the developed area. But at the same time, this was, as you rightly said, it was expected that they will relax the SEZ law in such a manner that SEZs will get a lift. But prima facie, there does not appear to be much proposition in that context. But I should admit that I have limited exposure to having done some tax planning and fundraising aspects in SEZ, and that is in limited number of cases only. I do not have so much wider knowledge which you are speaking in terms of statistics.
Secretary sir, unmute yourself. Unmute yourself. Secretary sir, unmute yourself. Nagawekar sir, unmute yourself. Nagawekar sir, unmute yourself.
Mr. Sudhakar?
Yeah.
Yes, sir.
Please
Yes.
go ahead, sir. Mr. Sudhakar, please go
I just
ahead.
have one small clarification. GST for residential building construction is around 12%, not 18%, somebody told. Is that right?
Yes, Raveendaran, sir.
Sir, it is audible, sir?
Yeah, you are audible, sir.
For residential building, 12% category is also there, 18% is also there, sir. Both are away, both is charged. If it is a subcontracted, you got to charge by 18%. If you send a specific query, I will give it in writing, sir.
Okay, sir, you share your number in the chat box, please. Mr. Raveendaran.
Shall I request Neerav Parmar to conclude?
No. Mr. Mohinder has a question. Mr. Mohinder has a question.
Yes.
Sir, my question is to Tarun Ghia ji. In a redevelopment project, where the member is getting 2.8 times of his flat area, where he is getting 2 flats, and is getting corpus amount around 40 lakhs. What is the tax liability in the way of income tax and GST?
As far as income tax area is concerned, today I am addressing only income tax.
Yeah.
And today Raveendaran is taking in indirect taxes. Taxation, to my understanding, if it is by transfer of development rights, which have been generated either by virtue of TDR or premium FSI, then taxation on the enlarged flat which he received, taxation on 45 lakhs he received, will come to zero only, because these are all in terms of the asset which has been transferred, which did not have any cost of acquisition. When it comes to rental compensation, the rental compensation also will go to zero taxation, but this all will depend upon how development agreement is drafted. Let me elaborate this. After I succeeded, the Shailaja judgment was so much important by me that it was printed, published by Times of India, Economic Times, Business Standard. Every newspaper carried my judgment because it was a very big issue that the department started facing, that redevelopment can bring zero taxation. Then one of the meetings I was addressing of professionals, one advocate came to me, Mr. Ghia, I had cited in the tribunal your Shailaja judgment, still my society has been taxed. So what is happening, sir, is that there is no law whether development agreement or redevelopment agreement are taxable or not. The law is silent on that. So by default, it is taxable. But if this scheme is drafted in a manner, then it can bring zero taxation. So it is all in the drafting of the document, and very rightly so. Supreme Court in Vimal Lalchand Mutha judgment has said, and this is very important for you people in immovable properties, that if any transaction is contained, is embodied in a document, then whether that transaction will attract tax or not, there cannot be any straight formula. One will have to read the document in totality, and then one will have to analyze the taxation transaction. I'll give one more example at the cost of our time, that one document drafted by a very big solicitors firm had come to me, and which usually come to me, that the concerned landlord in Dadar and their chartered accountant approached me, Mr. Ghia, you make it tax friendly, and you see that legally his rights are ensured. They gave me the development agreement drafted by the solicitors firm. We changed the entire agreement. Very arrogant email came from the solicitors firm. It was decided Mr. Ghia will be approached only for taxation point of view, but he has changed the entire document. And our answer was like this, sir, we have not changed any commercial terms because that was not our domain. But let me make it that we were also asked the legal terms to be changed. Even if legal terms were not to be changed, from taxation point of view also, kindly appreciate what is tax friendliness, either to bring the tax to zero or to minimum. Now that friendliness cannot be brought by me by inserting one clause that tax this at zero rate, tax it minimum. I have to redraft the entire agreement in a manner that the tax is brought to zero or in a minimum tax. And therefore, I have taken a view always that legal drafting and taxation drafting are intertwined. And therefore, if the document is drafted in a manner that the decided Supreme Court judgments are applicable to that document, then it can bring zero taxation. So in your question also, if the development agreement is drafted properly, it will bring zero taxation, and there are many judgments on those lines also.
Thank you. Thank you. Is there any question, Madhu?
No.
Now I am requesting our
1 minute.
Vice President, Mr. Neerav Parmar.
I think, I think Mr. Mangnani Sahab has raised his hand.
Huh?
Secretary Sahab, Mangnani Sahab has raised his hand on the screen. He wants to ask a question. Mangnani Sahab, you want to ask a question?
No.
Okay. Then now we'll go to, we'll now request Neerav Parmar ji, Vice President West, to offer his concluding remarks.
I'd like to interrupt Neerav sir. If you can see the chat, what is GST rate for developed plots? Neerav sir, unmute yourself, sir. Unmute yourself. Unmute yourself.
Yeah, but you are not muted. I mean, unmuted me. Fine.
Can you see the chat? Just Secretary sir, we forgot to see the chat.
Okay. But there is only one query.
No, what is the GST rate for developed plots?
Yes, Raveendaran sir, you can
The developed plot, sir. So far as GST is concerned, the tax will be charged depends upon when it is completed. Where if it is completion certificate is obtained, after that the plot is sold, that there is no tax GST. You have to straight away go to the state government and you have to go for registration. If it is developed stage, if we are under the developing stage,
it is a more.
There are a lot of agreements are there. So 1%, 5%, 0% is possible. So if they give that query in mail, I will give that detailed reply, sir.
Okay. What layer subcontracting exempted rate of GST under which section?
Which is, sir? What friends, this session is only for a budget related session, and all this GST and all other we have already. We have lot many sessions on GST. There we can, even those who are having some queries about all GST and etc. You please write to us. We have that committee with us. We can give that reply in writing to you, concerned people. Now I request Neerav Parmar ji to offer his concluding remarks.
Yeah, thank you, Secretary sir, President sir, and all the respected members who are present here. I think we had a wonderful session on this aspect, where the best part of it was the two learned members who are the keynote speakers today. They have distributed and divided the topic among themselves, wherein Mr. Raveendaran spoke about indirect tax and Mr. Tarun Ghia spoke about a direct tax. So in fact, there was no overlapping of both the topics, and specifically they had gone through within their own arena where they wanted to speak on that. So first, I think what Mr. Raveendaran ji said, he was very clear and announced that there has been no reduction in GST, there are no new rates, and the GST collection was fantastic this year, the highest so far of 1.4 lakh crores.
Yes, Neerav.
Network.
Neerav network.
Neerav ji, you are hanged.
Yes. Okay, sir. Continue, sir.
Yeah. So yeah, Mr. Raveendaran also pointed out that pre-budget memorandum we had submitted 17 points, out of which 3 points were considered by the Finance Ministry. So I think in a way, of course, it does not fully satisfy our requirements, but to the efforts put in by BI, those three factors have already been featured. We should take a lot of pride in that, and next one onwards, I think the team will work more and push it to get more of the points being addressed. I think we should thank our team. Kudos to them that those 3 points have been considered. That is a really good appreciation. Then clarification on government entity, which Mr. Raveendaran very rightly pointed out that the confusion still persists about the government entity, which needs to be defined, because that will resolve most of the issues, most of the doubts which our contractors have with respect to the notification, which is applicable from 1st of January 2022. I think that is very nicely explained by him. 3 concepts of ITC, how to avail the input tax credit. Like if the supplier delays, the supplier does not fill it up, then the input tax credit is not available. Then there is restriction, even supplier pays, but it is not reflecting in the returns. Which is, and thirdly, applicable from 1st of January 2022. I think that it's good. There's a lag. Okay, ITC availed but not utilized, then interest will not be applicable. This is a very welcome part, because most of the time people are having an ITC, it is building up and it is lying unutilized. Then levy of penalty is a new introduction at 200 rupees per day. Filing of returns, most of the things have been shifted from September to November. So a couple of months relaxation has been given. Then availment of ITC missed out in previous financial year can be taken up to November. So again, in most of the cases, there is September dates have been moved to November. I think that's a very nicely pointed out. He also spoke on the credit note part, which can also be taken up. Then GST returns filing has also been permitted. There can be delay of 2 months. He also explained us the works contract, the various percentages, which we have been hearing to him. He has been very nicely navigating those points and making it very clear. Then GST, and I think, as he rightly said, the burning issue besides the budget is the notification. I think that in a closer group, President can take it up with the office bearers and with the convention, with the committee. Now coming to Ghia sir, I think when Ghia sir talks, I think it's an encyclopedia. We never know where we are right now. So he is wonderful. I think he started with recovery path for economy, how it worked. And I think very wonderful aspect which he brought to the fore is that foreign investment, which defines the industry and how does it work. Yes, as he rightly said, foreign countries, their interest rates are to the tune of 2 to 3%. And today only I came to know while he spoke that it is also minus. So when they bring money into India, they're happy with 4 to 5% returns also. So this money, when it is put into real estate, into infrastructure investment, that will boost our industry, and that returns we will get it. And in the term, it's a win-win situation because even the investors, foreign investors, are getting the returns. I think that is one wonderful aspect. And today, I think all our members learned that what he started with spending is vice and selling is virtue. But this concept was not known to that extent, but today it has become reverse, which is also a very notable aspect to understand. Then growth of international funding as already has covered. Now, and as he rightly said, the interest rates in India is never going to fall below a particular level because it is an imperative of any government of the day to protect the fundamental rights of the investments made on the interest by the individual people, individual citizens of the country. So that needs to be protected. So this is one aspect we will there. With respect to RE, real estate development, he also spoke about rental housing. USD has been strengthening, which means weakening of the Indian rupee. Then taxes, 15% for new investment, that is also bringing more investment to that. Now, I think one thing which he very clearly explained, which we only understood on the face value of it, is concept of updated returns, which everybody was so happy when we understood. But when he explained the flip side of it, I think it is like you are giving something and also taking away something. If you do the limitations open up to 1 year, then you pay 25% extra plus the interest. So, and if you do it between first year and second year, which is the permissible, then you're paying a 50% extra. I think this is as good as what we saw in the recent past when during COVID, RERA extensions were given. I'm just making a comparison to the situation where RERA extensions were given to the project, but at the underlying line was that your commitment and your penalties to the customers remains. So in a way, we are saying we are giving this, but at the other hand, we are taking away some of the things. Then also when he explained one thing, which I think is a very wonderful aspect, very nicely explained, was with respect to the litigation management. Now in this litigation management, if a SSC is winning a case in the appeal, I mean in this thing, then the collegium will decide whether there is a similar matter happening in the country. So I think it's a very, very proactive step to look at the precedent set by any other matter, rather than challenging and then falling flat. I think this will add a lot of value to the aspect that you reduce the litigation. I think it was very nicely played. Then he also spoke about the irregularities and illegalities in a real estate property dealing, where you can introduce an intermediary who will pay, and then that thing will be taken care. Since out-of-pocket expenses can never be exempted, so the intermediate is a welcome part. Then he also spoke on TDS on transfer of immovable property, consideration on stamp duty, and SSCs have shown loan, credit, gift in book. I think that is a very, this particular aspect is a very point of concern. Earlier, they were only showing that, yes, I have a loan or a credit or a gift from XYZ. But now under this amendment to the finance bill, we have to, I mean, the person who has given the loan or the gift has to specify and identify the source. So I think you're bringing that person also into the net. So that is I think, you know, your so the people who are going to give you loan or any gift will also be very wary about the fact. I think with all this, you also spoke about the positive aspect is on AOPs and JVs, where the TDS has been reduced to 15%, has been considered that. You also spoke about family partitions and arrangements and development and redevelopment. I think he himself has given his own example of the judgment. Finally, I think what I found is when everybody, members have also asked so many questions which were pertaining also showing the anger towards the policy decisions, which was wisely answered by Tarunji without making it any controversial aspect. And those were very, very pertinent questions asked by members, but those were related to the finance minister, which I think he cannot answer, but still he took strength to take the answers for that. I think with this, I think we had a wonderful session. I hand it over back to our secretary, sir. Thank you.
Thank you.
Thank you to all.
Neerav, your concluding remarks are required to be concluded. Okay, thank you. With this, I request Mohinder Rihwani, our chairman, Mumbai Center, to pay the vote of thanks.
Thank you, Secretary Sir. It has always been a pleasure to hear Chartered Accountant Tarun Ghia. He has been associated with BI since long, and he has addressed our members even on RERA. Sir, I thank you for obliging us today and addressing us. Chartered Accountant Tarun Ghia is also chairman of BI Direct Taxation Committee, and we look forward to further guidance from him. I also thank CA M. Raveendaran, who is chairman of BI Indirect Taxation Committee, for being with us and addressing us today. I thank Shri Ram Niwas Gupta, President of BI, for setting the balls rolling with this opening remarks. I thank Neerav Parmar, Vice President, for his thoughtful insight into the proceedings while delivering the concluding remarks. I thank all the senior functionaries of BI from across India for joining us and encouraging us. I thank all the participants for attending the webinar. I especially mention of Shri Pradeep Nagawekar, Honorable General Secretary, BI, convener of today's webinar, for taking lead in organizing this highly informative webinar. Thanks to Shri S.D. Kannan and Shri Naresh Grover, Co-Chairman, BI Direct Taxation Committee, and Shri Gaurav Goyal and B. Srinivas Murthy, Co-Chairman of BI Indirect Taxation Committee, for their involvement in organizing today's webinar. Last but not the least, a word of appreciation to the back office of BI, led by Shri Raju John, Executive Secretary, ably supported by Sanjeev Madhusudan at Communication, for the efforts in success of today's webinar, and our BI staff also, Swapnil and other members who have supported them in the. Thank you.
I also thank Mr. Mohinder Rihwani, Chairman Mumbai Center, who is always assistive for such type of webinar. I thank him, and this is friends. Once again, thanks from me. You all have given very good response to this session, and really it shows your interest. And with this, I announce here that the meeting is concluded.
Thank you.
Thank you to all.
Thank you, sir. Thank you.
Thank you, sir. It was very interesting.
For the information, everybody, we have Mr. Salim Raza.
We should have this kind of meetings.
Thank you.
Thank you, Salimji.
Salimji has come from Pakistan, all the way from Pakistan.
Thank you very much. I enjoyed the whole conversation.
Thank you.
Yeah, it was in fact related to tax problems in India, but still I learned a lot. And talking of construction industry, they are facing the same type of problems everywhere. Even in our country, we are facing these tax problems. And I have learned a lot, and perhaps I'll share the views with my colleagues, and it will be beneficial for them as well. Thank you very much. I enjoyed being part of this conversation.
Salimji, maximum times you have attended our webinars and all seminars. How do you compare those with your countries? Your countries about this development of.
We are also. I was the chairman of Institution of Engineers for Quetta Center for a good 6 years, and we used to hold seminars and workshops. But this Zoom thing has really brought so many people around the world together, and they are definitely better than. But face-to-face interaction is definitely more productive and more progressive, and we look forward to have that. And in Pakistan, we are also having these seminars, and both they are restricted to Zoom at the moment.
Is there any regulatory authority for real estate?
Construction, there is no as such regulatory authority, except that we have Pakistan Engineering Council, and it's also looking after the problems of contractors as well, like registration. And my personal view is that we should have another separate entity which should deal with the contractors only. And Pakistan Engineering Council, they should not have anything to do with the business of contractors, because being a part of this PEC, the interests of engineers, they are not being looked after properly. So we are trying to have another authority which should regulate the construction industry business. It will be definitely benefit. And we are facing the same type of problems here as having low-cost housing, house for everyone. And we really cannot and have not been able to give any idea that what is a low-cost housing. In fact, general conception is that having a small area is a low-cost housing, whereas in my opinion that low-cost housing should involve the construction with such materials which are cost-effective, and the house should be built in such a way that it provides all the facilities like sewerage and water supply and gas, etc., etc. And it should be affordable for the lower middle class. So far, you would appreciate that even in India, perhaps, the low-cost housing has the same meanings, that you just have a smaller area and it's called a low-cost housing. Whereas it is not a low-cost housing, it is just a reduced size of house which is being used. And you are facing same problems perhaps in Bombay and in big cities as we are facing in Karachi or Lahore, and even now in Quetta. So we really need input from everybody, that how should we go about reducing the cost of materials which are being used. Because at the moment, the basic materials which are being used like steel, cement, and they are very, very expensive now. And they contribute to about 50% of the cost, and labor is about 20%. So,
thank you. Yes, so, Salim sir, thank you very much for all this information. Now you can, Madhu.
Yes, sir.
It is open house, no? Now.
It is open house. People can exchange their thoughts.
Those who want to leave, they can. Meeting is concluded.
Yeah.
Nagawekar.
Till 27 are there.
Yeah. Jawab Gupta sir, boliye. Bola.
Hello.
Hello.
Am I audible?
Yeah, you are audible. Yes, Mr.
My humble request is with the President, Mr. Gupta. What happened to the meeting which was supposed to be held with the Railway Minister and Railway Board?
Gupta ji is there.
No, President has left. President has left.
No. Gupta sir, you please contact him on phone.
Okay, sir.
Okay.
Because at Jaipur it was proposed that there is some meeting are underway with the railway minister and the railway board regarding
he can give the detailed information to you because he is dealing that matter with the department.
Right, sir. Right, sir. Thank you.
Okay, thank you. Thank you.
Nagawekar.
Yes.
Nagawekar.
Yes, बोला.
हाँ,
बोला ना. बोला.
ATI भी मेरे एक्सटेंशन मिळाला का?
मेरा भी अच्छा है बात.
ATI भी अफोर्डेबल हाउसिंगचं जे होतं ना, इनकम टॅक्स बेनिफिटचा
पहले मैंने प्लान दिया था मेट्रो का.
इन्कम टॅक्स बेनिफिट अफोर्डेबल हाऊसिंगला 22 पर्यंत मुदत होती. मार्च ते एक्सटेंड झाली का? ती कुठे पाहायला मिळाली? झाली ना?
हो.
कुठे पाहायला मिळालं नाही म्हणून म्हणलं आहे का?
अच्छा, मी चौकशी करून सांगतो तुम्हाला.
हा, तेवढं सांगा.
येस.
थँक्यू.
चलो एंड कर दो. मी सेक्रेटरी सर, शाला एंड.
Yes, of course.
Mr. Madhu.